Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing about the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the US markets in trade yesterday. So the US markets witnessed a sharp surge in trade, specifically the Nasdaq. So the Nasdaq was up nearly 2.6% in trade yesterday, while the S&P 500 jumped by 1.6% and the Dow ended higher by 0.2%. Going ahead for the S&P 500, any sustainable move above the levels of 5,600, 5,550 would lead to an upside towards 5,600 followed by 5,660 levels. While on the downside, the support has shifted higher in the zone of 5,480 levels. If you look at Brent oil too witnessed a pullback rally of nearly 4% in trade yesterday. Going ahead, the zone of 82.50 would be the immediate resistance. If the index manages to move above that, then we could see an extension towards $84 a barrel for Brent crude. Now coming to the update regarding our markets in trade. So in trade yesterday, the benchmark index Nifty, that is, traded in a narrow range of 128 points. This for the third consecutive trading session we have witnessed the index trade in an extremely narrow range. However, if you see from a closing basis, it managed to hit a fresh all-time high. Going ahead, the zone of 25,000 will be the immediate hurdle for the index. Any sustainable move above the levels of 25,000 would lead to a move towards 25,130 followed by 25,250. On the downside, if we see the zone of 24,880 will act as the immediate support for the index. If the index slips below the levels of 24,880, then the next support is placed at 24,770 levels. Coming to the derivative data for the index, so if you see in trade yesterday, the futures edged up by 0.34%, while the cumulative interest has surged by 5.51%. Among the constituents of the index, we have 22 stocks which have witnessed a long build up, 11 stocks have witnessed short covering rally, while 12 stocks have witnessed short build up and 5 stocks have witnessed long unwinding. If we look at the option chain data for today's expiry, that is, since today is the weekly expiry for Nifty, we have 25,000 strike which has significant call open interest, followed by 25,100 strike, and on the put side we have 24,900 which has substantial OI, followed by 24,800 strike. For the expiry today, we see the PCR currently is at 1.19 and the max pain is at 24,900, while for the monthly expiry the put call ratio is at 1.49. Coming to the update regarding Bank Nifty in trade yesterday. So Bank Nifty, the July monthly series, we had the expiry. Bank Nifty traded in a narrow range of just 337 points yesterday, which was the lowest daily range in the last 10 trading sessions. On the daily scale, if we see, it has formed a doji candlestick pattern which suggests indecisiveness at the current juncture. Going ahead, the zone of 51,150 will act as the immediate support for the index. Any sustainable move below the levels of 51,150 would lead to further selling pressure in the index up to the mark of 50,700. On the upside, if we see, the resistance has shifted lower in the zone of 51,950. Any sustainable move above the levels of 51,950 would lead to an upside in the index towards the mark of 52,400. Coming to the option chain data, that is for the next week's expiry, we have 52,000 strike which has significant call open interest, followed by 52,500, and on the put side majorly it is seen in 51,500 strike. Coming to the key market indicators, so we witnessed that the volatility index has been trading in a zone of 11.27 and 13.4 since the last 5 trading sessions. Going ahead, any sustainable move below the levels of 11.6 will lead to further correction up to the mark of 9.90 in the short term. The advanced decline ratio remained flat in trade yesterday, despite the index marking a fresh lifetime high on a closing basis. Coming to the key sectors in focus, so technically we see Nifty auto, pharma, IT, oil and gas, CPSE, consumer durables and PSC. These are the sectors that are likely to continue their outperformance in the short term. Coming to the FII/DI data, so in the cash market segment specifically, the FII sold to the tune of 3,462 crores, while DIs purchased to the tune of 3,366 crores. That's an end of today's session. Thank you for regularly listening to our podcast. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.